Good morning and welcome to IG's early morning call on Monday, the 27th of November. I'm Angela Barnes. Well, coming up on today's programme, equity markets. Well, Europe indices are set for a lower start ahead of inflation data in the US and Europe, while gold is on the rise. Black Friday, or US shoppers spent a record $9.8 billion online, but will it be enough to save the holiday season? And in commodities, Brent and WTI continue to fall as the markets await the delayed OPEC Plus meeting outcome. Well, we've got all of that coming up, but let's start by taking a look at volatility this morning and look at the VIX chart. Well, you can see it has been lower the month of November, with volatility down about 29% this month. But since Friday, volatility has edged higher slightly, however, as investors start the week poised for a raft of economic data that will likely shape market trends. Today, the VIX is up 0.83% at the moment. Well, with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe. Let's just first of all take a look at the FTSE, set for a rather flat open, currently down 0.2%. France's CAC 40, however, set for a slightly higher open, up 0.09%. And Germany's DAX, also pretty flat there, down 0.1%. So a rather flat start, but mixed for the European markets. And they're going to be, investors will be looking towards German consumer confidence, unemployment data, as well as retail sales. And inflation figures as well, and Eurozone sentiment also coming through this week. And this is after, on Friday, the FTSE was almost flat as well, and the major European markets were in the green by close as the European Central Bank president laid out the bloc's stance on interest rates, with Christine Lagarde saying that the bloc is entering a wait-and-see phase in terms of changes to its bank rate. Despite this, she said the battle against inflation isn't over. Well, what about Asia overnight? Well, the markets started this week, as you can see, all lower. The Nikkei 225 was down 0.53%. Hong Kong's Hang Seng also down 0.32%. And Australia's S&P ASX 200 also in the red, down 0.75%. Well, Chinese markets were dragged by property stocks and Japan's service inflation surging to a high, with its PPI rising to 2.3% in October. Investors will also be digesting China's industrial profits data. We're going to have more on that shortly. And Australia's October inflation figures are due out on Wednesday, which will also be in focus this week. Well, what about Wall Street? Well, US stocks ended little change in holiday shortened trading on Friday as investors watched the start of the seasonal shopping season for signs of consumer resilience, with Black Friday discounts the day after the US Thanksgiving holiday. So let's have a look at how those equity markets closed on Friday. Dow Jones Industrial Average up 0.33%. S&P 500 also up 0.06%. And the NASDAQ tech-heavy NASDAQ Composite closed lower, down 0.10%. Well, the NASDAQ was dragged lower by weakness in the mega cap momentum stocks. And then what about today? Well, the three main indexes, if we have a quick look, US 500, the US Tech 100, the NASDAQ, and Wall Street as well, all set for a lower open this morning, as investors now will be keeping across a raft of economic data. And we'll have more on that in just a moment. But moving on. So today, profits in China. Well, profits earned by China's industrial firms declined by 7.8% in the first 10 months of 2023 compared to the same period last year, slowing from 9% last month. In state-owned firms, profits fell at a softer pace, minus 9.9% compared to the minus 11.5% posted for the January to September period. Ditto in the private sector, where profit declined by 1.9% compared to a 3.2% fall for the previous period. And if we switch over to Forex as well, and if we look at the US dollar, Chinese yuan pair, well, slightly higher on the day today. And moving on as well, in other news, we've got in US statistics over in the US this afternoon, new home sales are forecast to fall by 4% in October, month over month, after a 12.3% rebound in September, which took them to their highest since February 2022. And then let's stay in the US because we expect as well this week on Wednesday the second estimate of Q3 GDP growth, the growth rate, which should come in at 4.9% quarter over quarter on Thursday. The core PCE price index is expected to rise 3.5% in November year over year. And then in FX markets, well, they've been relatively quiet overall with the holiday shortened week last week, apart from the British pound. If we look at the euro US dollar chart, the euro has edged up against the US dollar, consolidating its recent gains, while the single currency has struggled actually against the pound. But the dollar has been moving lower as the US economy feels the pinch of tight financial conditions. And then back in Germany, where the market in particular is awaiting a couple of indicators on Tuesday, the GfK Consumer Confidence Index is forecast to rise to minus 26. And on Wednesday, the Consumer Price Index in Europe's largest economy should come in at 3.7% in November year over year. And then if we just go to the euro pound price chart as well, the euro dollar could also react to these as well as the euro sterling, but the sterling has gained roughly 3.7% for the month on easing economic gloom in the UK as traders now eye fresh cues as noted this week. And finally, in China, the purchasing managers' indices are anticipated to show small improvements. On Tuesday, NBS manufacturing PMI is seen rising to 49.9 in November from 49.5 the previous month. On Friday, the Caixin manufacturing PMI is expected to rise to 50.2 from also 49.5 in October. And then on the UK earnings front this week, well, on the corporate side, today will be a very quiet day, but there will be more to come later this week with Topps Tiles, EasyJet on Tuesday, Halfords on Wednesday, followed by Mulberry and Doc Martens on Thursday. Well, in the US as well, investors await quarterly reports in the technology and retail sectors this week. On Tuesday, the street expects earnings from HPE and Dollar Tree. On Wednesday, Snowflake, Foot Locker, and Thursday it will be Dell Technologies and Salesforce. But none of these stocks are all session stocks on the IG platform, but I just want to look at a couple of them. First of all, let's just pull up the chart for Dollar Tree. Here we go. Well, Dollar Tree stock has had a difficult quarter. The August to September drop was mainly a reaction to the group's last set of results. Gross margin fell 220 basis points to 29.2% in the second quarter, reflecting lower mark-ons. And then if we just move over to Dell Technologies, well, its stock rose by more than 30% in the last 3 months, a rally triggered by better than expected earnings, revenue and forecast in its last quarterly report. Analysts see Dell benefiting from booming demand for artificial intelligence servers. Following Dell's last set of numbers, Morgan Stanley said the group was emerging as an early generative AI winner. Investors will want to see further proof of that, of course, on Thursday. Now, Black Friday, well, US shoppers spent a record $9.8 billion online, according to Adobe Analytics. Well, a welcome boost for US retailers, but unlikely to change the gloomy forecast for the holiday season. Well, according to MasterCard Spending Pulse, US retail sales on Black Friday rose 2.5% year over year. Early in September, the indicator which measures in-store and online retail sales across all platforms of payment anticipated US retail sales to grow 3.7% during the holiday season, running from November the 1st through to December the 24th. Well, if we just pull up the Amazon all session stock, well, the weekend will likely give another boost to its share price, as well as Walmart as well, also an all session stock on the IG platform. Well, major retailers rose on Friday as Black Friday kicked off, with Walmart and Target as well up 0.9% and 0.74% respectively, while Amazon also ticked slightly higher by 0.02%, and it's not so dissimilar today on the day, currently up 0.01%. And also as well, we've got Cyber Monday today, so Amazon and Walmart as well, both all session stocks are gaining slightly today. Walmart also, as just noted, well, Amazon there just up 0.01, but Walmart a little bit more. Of course, there we are, up 0.89%. Well, let's move on now to commodities, because oil, well, first of all, before we look at the price chart for Brent and US crude, just for some context, it seems OPEC Plus have moved closer to a compromise with African oil producers. According to Reuters, disagreements emerged between the organisation's members on 2024 output levels, which forced the group to postpone its meeting from November the 26th to November the 30th. Well, several analysts have said they expect OPEC Plus to extend or even deepen oil supply cuts into next year in order to support prices. Well, the market is also waiting to see if Saudi Arabia extends its additional 1 million barrels per day voluntary production cuts, which is due to expire at the end of December. So you can see we've got US crude oil price chart up at the moment. It's currently trading down 0.15% and at around $75 a barrel. While Brent is also trading in the red this morning, down 0.18%, currently at around $80 a barrel. So both Brent and WTI lower on the day, currently not supported by the anticipation of what OPEC might do, but the market will certainly be awaiting its outcome. And then moving on to gold as well, because gold has topped the 2000 level for the first time in 6 months, last seen at this level around the 15th of May. Well, base metals such as copper and iron ore have also been on the rise since October, thanks to the downtrend in the US dollar. Well, the dollar uptrend also comes the gold uptrend also comes as the private sector in the US continued to grow at a slower pace in early November. And the yellow metal is also fueled by expectations that the Federal Reserve will not raise interest rates further. Later this week, gold traders will also be watching, of course, US GDP figures on Wednesday and more inflation figures on Thursday. Well, that's all we've got time for today on Early Morning Call. But do tune in to our Look Ahead show this afternoon and also Beat the Street ahead of the Wall Street Open this afternoon. Thanks for watching.